Toronto's real estate still a path to building wealth? It's a question I hear all the time. It's the one we are going to tackle in today's video. The answer isn't a simple yes or no. It totally depends on timing, strategy, and your personal situation. So stick around because I'll be breaking down the data and sharing real examples from my experience to help you figure out what it means for you. Now, let's start with a bit of context. Toronto's real estate market has made a lot of people wealthy over the long run. In fact, over 25 years, the average homes in GTA have increased by about 450%. To put that in perspective, a house that sold for about $200,000 in the 1996 could be worth over $1 million by just 2021. That's roughly a 7% annual growth rate sustained over decades. Pretty remarkable growth by an investment standard. And it's not just in the city of Toronto. Surrounding regions like Peel, York, Durham, Halton also saw huge gains, even higher than the city in some cases. For example, York region saw prices climb by 874% in the same duration. So yes, historically, owning property in the GTA has been a proven way to build wealth. But history is only half of the story. The big question is, what is happening now in 2025? Are we still seeing those easy gains or the game has changed? To answer that, we need to take a look at the current market data and more importantly, translate what that data means in plain English for you and for me. Right now, the market has cooled off compared to the frenzy of a few years ago. You might remember how crazy it was during 2020 and 2021. There were bidding wars, home selling in days, and prices shooting up like no ending. That peak was around early 2022. Since then, things have leveled out and even dipped slightly. Here are some key numbers to know. The average GTA home price is about $1.12 million as of May 2025. That's actually down by a bit, roughly 3 to 4% from the same time last year. In other words, if you bought a home a year ago, on average, it might be worth a tad less today. And that's a notable change from the years where everything was going up like clockwork. But month to month, we've seen a small uptick as well, about 1.2% from April to May. So prices are not free falling. They're basically flat to slightly softer compared to a year ago. Now, coming to inventory, that's the number of homes for sale. It's a huge story right now. In May, there were around 30,964 active listings across the GTA. That's 42% higher than a year prior. Highest level of inventories we've seen since mid-1990s. The last time we had these many homes for sale was in May 1995. For buyers, more inventory means more choices and less pressure. You can actually go see several homes, think overnight, and still not lose out on that listing. That's very different from the scramble and bid 100K over asking days back in 2020 and 21. For sellers, it means more competition and the need to price and present a home very carefully. Now, let's talk about whether it's a buyer's market or a seller's market. Right now, by the numbers, we are in a completely buyer's market. One measure is the sales to new listings ratio, essentially the percentage of new listings each month that will actually sell. In May, that ratio was about 29% in the entire GTA. Anything under 40% is considered a buyer's market, meaning buyers generally hold the cards. In practical terms, homes are taking longer to sell and buyers can negotiate more. The average property now takes about 26 days or more to sell, versus maybe 1 or 2 weeks during the peak market. Homes are selling for about 99% of the asking price on average. Compare that to last year when homes were selling over asking at about 102% on average. So the power balance has shifted towards the buyers. Now, coming to the interest rates and affordability are a big part of this shift. The Bank of Canada aggressively raised rates in 22 to combat inflation, which pushed the mortgage rates up and cooled down the demand. The good news is that since then, the rates have stabilized and even come down by a bit. The Bank of Canada has cut rates several times heading into 2025. The overnight rate dropped from about 5% in 2024 to about 2.8% right now, and that's helped improve affordability somewhat. And mortgages are not as brutally expensive as they were in the peak of rate hikes. However, they're not back to the ultra lows of those 1%, less than 1% of 2022 either. We are somewhere in the middle. Financing is still tighter than it was in the boom, but it's easier than last year. This dynamic has kept some buyers buyers on the sidelines despite conditions being in their favor. And I often say, don't try to time the interest rates perfectly. Focus on what you can afford comfortably because rates will eventually change. Right now, at least we are not dealing with those skyrocketing rates. We have a bit of breathing room. Okay, so the market has cooled, the buyers have more leverage, and prices are roughly steady or slightly down year over year. What does that mean for building wealth through real estate? Should you still bet on it? Let's unpack this. First, it's important to remember that real estate wealth is usually a long game. Even in Toronto, prices don't rise in a straight line every year. We have cycles. There were booms like in 2015 and 2017 and again in 2020 and 2021. Then there were pauses or let's say pullbacks like 2018 and the last 18 months or so. But over a span of 5, 10 or 20 years, the trend has been consistently upward. That's due to the fundamentals like population growth and limited supply. Toronto's population grew about 45% from 1996 to 2021. It is still growing today with thousands of newcomers every year. And all those people coming in need a place to live. That underpins the housing demand in the long term. So if you have a long horizon, the history suggests that owning property here will likely appreciate and build equity over time. However, here is the but. The days of overnight windfalls are behind us, at least for now. In the last couple of years, if you bought a home expecting its value to jump up by 20% in 1 year, that's not happening right now. In fact, as we saw, the prices might temporarily dip or stay flat in the short term. Building wealth in this environment requires patience and strategy. It is more slow and steady rather than rocket ship to the moon. And you need to be prepared for ups and downs along the way. Someone who bought at absolute peak in early 2022 might have seen their paper value drop later that year. But if they hold that property for the next 5 or 10 years, the odds are that they'll be back in the positive territory. I always remind my clients of that old saying, don't wait to buy real estate, buy real estate and wait. No matter how cliche it sounds, but it definitely works. Time in the market tends to be timing in the market. Now, let's get to the specifics. Building wealth through real estate can look very different depending on who you are. I work with a lot of first-time buyers, folks looking to upsize, people planning to downsize, and clients relocating across in the GTA. Each situation has its own challenges and the strategies that go along with them. I'm going to address each of these so you can get advice tailored on your stage right now. The next sections will help you pick out that bits that apply just for you. So for first-time buyers, if you're trying to get into the market for the first time, you might be feeling a mix of excitement and dread. The prices are high even after a slight dip. Affordability is tough, and I won't sugarcoat that. The affordability crisis is absolutely real. Even corrected prices haven't magically made things cheaper. But here's the flip side. Conditions for buyers are better now than they've been in years. More inventory means you're more likely to find something in your budget without a crazy bidding war. And prices are a bit lower. Sellers are more flexible. The interest rates, while not super low, are at least stable. This is the kind of environment first-time buyers begged for during the frenzy. Yeah, I know many of you are still hesitating. Maybe you're waiting for the prices to fall further or the rates to drop a bit more, but my genuine advice is don't try to wait for the perfect moment. If you have your down payment saved and your financing is lined up, this is the moment you've been waiting for. You actually have a window where you can negotiate and not waive all of your conditions. Take advantage of that. So how do you build wealth as a first-time buyer? Your first home likely isn't going to make you rich overnight, but it sets the foundation. It gets your foot into the door. When you pay rent, all that money is gone. But when you pay a mortgage, you're building equity slowly at first, yes, but each payment increases your stake in the property. Over a few years, two things happen. You pay down your principal and your home values can increase. Even a modest growth in the increase on the home value does matter. For example, if a 600,000 condo grows by just 3% a year for the next 5 years, that's over $90,000 in appreciation. And your mortgage pay down and that equity builds up. I've seen clients start with a condo or a townhouse in a more affordable area like Oshawa or Milton, and a few years later they trade up to the preferred neighborhood in Toronto or close to Toronto. The key is getting in the market in the way that's financially comfortable. Once you're in, market growth and mortgage pay down do their work over time. And remember, you're not in this alone. Talk to a mortgage broker, look into first-time buyer programs. It is possible, even if it takes a bit of planning. And for most people, in hindsight, they're really happy that they bought their first home when they did. Now, let's talk about upsizing. upsizers. Maybe you're already owning a condo or a smaller house and you're outgrowing it. New baby, need a home office, whatever the case may be. Upsizers have an interesting advantage in this current market. This kind of buyer's market actually benefits move-up buyers the most because you have something to sell and something to buy at the same time. You're playing both the sides of the equation. In a hot seller's market, selling your place is extremely easy, but buying the next one is hard. You might face bidding wars or pay a premium to get something that you like. In today's market, you still need to price your current home competitively. It might not sell in a week, but when you go buy your next home, you're less likely to be in a bidding war. You can negotiate. The price gap between what you sell and what you buy might even be more manageable now. The data shows that price gap between the suburbs and the city has shrunk this year. So if you're selling a condo in Mississauga and buying a house in Toronto, that jump might be a smaller one than before. From a wealth perspective, upsizing can be a really smart long-term move. You're investing into a more valuable asset. Historically, freehold homes, especially detached, appreciate more in absolute dollars than smaller condos. And if your family is growing or you need that space, you're also investing in your quality of life. Some upsizing keeps your first property as a rental if they can afford to do so. That creates two streams of wealth building: your new home and a rental property bringing you income. Even if you sell your first home to buy the next, you're likely to carry over a lot of equity, hundreds of thousands of dollars in some cases. That equity fuels your growth in the next chapter. And one more important tip: in this market, plan your sale and purchase very carefully. Align the closings or make your sale firm before you actually go buy something, so you're not stuck with two properties and paying two mortgages at the same time, because things move slower now and the timing absolutely matters. There's something I help a lot with: coordinating the timing so you're not left exposed doing all this on your own. Now, whether you're a first-time buyer or an upsizer or even downsizing, one thing remains true: you need a strategy to build wealth through real estate. And that's exactly what I focus on with my clients. And a quick personal note here: I believe real estate isn't about one-off transactions. It's about crafting long-term game plan, the one that might involve multiple moves over the years. For example, I recently worked with a young couple renting in Toronto. We mapped out a proper 5-year plan for them. First, they purchased a starter condo in Etobicoke. 2 years later, once that condo appreciated, we used their equity to buy a semi in Vaughan for slightly more space. And they kept the condo as a rental. Today, that rent covers most of the cost, and they're building equity now in 2 properties at the same time. That's real world wealth building. And if it didn't happen by accident, it was all planned all along the way. I'm sharing that because I want you to know this is what I do. I help clients build real estate wealth very strategically. Whether it's through smart investments, timing their upsizing move, or maximizing equity from a downsize. If you're not sure what your next move should be, or if you've got a goal like owning a detached home in, let's say, 5-10 years, let's talk. My role isn't just to buy or sell a home with you. It's to be a real estate coach and your guide. So if this video is helping you think, but you're not sure how to apply it to your own situation, feel free to reach out. I'd be happy to chat. No pressure, no strings, just real advice based on your goals. And that's part of my job that I really enjoy: seeing people hit their milestones step by step. Now, let's talk downsizers. Maybe you're at the other end of the spectrum. The kids have moved out, the house feels too big, and you're thinking about a simpler lifestyle. If that's you, first off, congratulations. The chances are that your property has grown a lot in value over the years. You've already built a serious wealth through your home. So the next step is preserving it and putting it to good use in your next chapter. Downsizers in this market need to be a little more strategic. As a seller, you're competing with more inventory. Your home might not sell overnight, but it's presented well and priced right, it will sell. And you're still very likely sitting on a large gain, even if prices are down a few percent compared to last year. If you're buying a condo or a bungalow, good news. The condo market has softened. There's more supply, you'll have the leverage. It's a great time to lock in something that suits your new lifestyle. One thing I always advise: don't wait too long. It's better to move in when you can still enjoy the process and not when it becomes a burden. The proactive move often leads to a better financial result and a more enjoyable experience. And now getting to our last group, the relocators. If you're moving into or around the GTA, this applies to you. Whether it's for work, for family, or life lifestyle, you probably have a lot of questions about where to go. The good news is you now have a lot of options. Toronto, Durham, Peel, York, Halton, these all offer different vibes and different price points. And with more homes on the market, you can take your time, make a thoughtful decision. For some people, moving from the core to the suburbs open up more space, more value. For others, it's about downsizing from a house in the suburbs into something smaller into the city. Either way, the key is understanding how to maximize what you already own or how to make a smart entry into your new market. If you're moving out of Toronto, chances are your equity here can go a long way somewhere else. So is Toronto real estate still a path to building wealth? The short answer is yes, but it is not automatic. You need to approach it with the right mindset, a right plan, and the right people around you. If you do that, it can still be one of the most powerful tools to grow your financial future. And thanks for sticking with me. If you found this helpful and you want to have a deeper conversation about your goals, I'd love to hear from you. Let's start building something smart together.